Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about GBPUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we must notice, first of all, is that we have a quite important historical structure level of support and demand lining up exactly at this area. This area, in fact, was acting as previous support here, again here, again here, again here, and just a few months ago, it was tested once again, exactly here, and rejected to the upside. At the moment, it seems like the market wants to go for another test of this zone before then getting rejected to the upside. So from a monthly standpoint, what we could expect is to see some short-term bearish price action for the market to go once again and test this zone. Dropping down on the weekly time frame, what do we see? Now, from a weekly perspective, we can notice how the market had resistance at this zone. The market tried breaking above that resistance, however, it failed. Immediately, it got rejected to the downside, and at the moment, the market is pushing to the downside quite aggressively. So from a weekly standpoint as well, everything seems quite bearish, and we could expect to see some bearish price action for the market to go and test that monthly support and demand area that we have just identified on the monthly time frame. What we can see from a daily perspective is that the market has just broken below a quite important structure level. In fact, this zone was acting as previous daily support, which has now been broken to the downside and is currently acting as resistance. Now, I also spoke about GBPUSD quite a few times in the past. I spoke about it when the market was here. I explained all the reasons for which we could expect this rejection to the downside. Then from here, I made another breakdown explaining all the reasons for which we could expect a rejection to the upside. And after the market had created this M pattern, I explained all the reasons for which we could expect a completion of the M pattern at the neckline. And again, that is exactly what the market did, and was precisely the neckline of this M pattern, which by definition is an area of previous support and resistance, that was respected as resistance, and the market rejected to the downside, creating this impulse that has just broken the structure level that we were currently identifying. And by the way, I will link in description all those previous analysis, so you can go and check them out for more free education. Now, at the moment, from a daily perspective, as we were saying, the market has just broken below quite important previous daily support that is now turned resistance. Generally speaking, when you have an impulse like this and you want to measure the correction, what you have to do is take your Fibonacci from the high to the low of the impulse leg. And if we do that, we can see how we have the 0.3 to 50% and 0.618 Fibonacci retracements, which are all lining up exactly with this level of previous daily support, turn resistance here, which we could in fact expect this market to want to go and test before then rejecting it to the downside. So from a daily standpoint, the situation is quite clear. We could expect first a correction and then more bearish continuation away from this zone. And keep in mind that inside of a confluence of resistance area like this one here, you would expect to see more institutional shorting, which at that point would further increase the probabilities of a potential push lower below this area. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing, and we check the data precisely for a pound, what we can see is that with the last reports, net positions have been decreased. We went from having 70.4k net positions down to 53.2k net positions. So we had a clear decrease of the net positioning, making the pound weaker. And keep in mind that all currencies on the spot are traded against the USD. So institutions moving back to the bearish side of the GBP means actually they're moving to the bearish side of GBPUSD, because all currencies, as I just said, are traded against the USD on the spot. Now, keeping that in mind, let's move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find here on the screen and also in the description, so you never miss new updates. Now, back to the chart. From a daily perspective, as we were saying, we have confluence of resistance here. And inside of a confluence of resistance zone, you have even increased probabilities of getting more institutional shorting, which at that point would further increase the probabilities of a potential push lower below the zone. So if the market will go and test this area, what would I expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, these are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bullish to a bearish market, at that point, I wouldn't be surprised to see a potential push lower, completing this daily impulse correction and impulse pattern to the downside. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in the description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below for any new pairs or topics that you would like me to cover in my next videos. And I will see you in my next breakdown.